morning, everyone. Welcome to the Next Level Call. I'm Sean Ruggiero. This is being broadcast live on Facebook. Today, we're going to be talking about the financial inventory. So the financial inventory is a tool that we use during the in-home when we sit down with clients. It doesn't matter if we're sitting down with final expense clients, mortgage protection clients, whatever the lead might be, doesn't matter the age, doesn't matter the lead, we're going to be using the financial inventory. And why? The financial inventory is what allows us to gain access to the other quintance from one quintant. So if we review here quickly, mortgage protection is the first quintant, final expense is the second, annuity, the third, IUL, the fourth, and the newest quintant is MedSup, MedAdvantage. Now, these quintants here, and I'm circling mortgage protection, final expense, and MedSup. Those quintants, we have access to leads. And when I say access to leads, there are a few annuity leads out there. I've seen some IUL leads, but nothing to the magnitude, the volume, and the easy access that you'll see with mortgage protection, final expense, and MedSup. So if we sit down with a mortgage protection lead, if we sit down with a MedSup lead, if we sit down with a final expense lead, we use the financial inventory to unlock all the other potential products. And that specifically includes annuities and IULs. That's how we sell those through Family First Life. Now, the first time I saw the financial inventory in use was Matt Smith back in 2008, 2009. Now, at the time, we had developed it just to try to find annuities when we sat down with people for mortgage protection and final expense. The financial inventory has evolved quite a bit since then. So what we're going to do is we're going to review the financial inventory, go over the sections of the financial inventory, and make sure you understand how you use it and why you're using it. So let's start with the first section. The first section is the client information section. Pretty straightforward, what we're asking for there. We're going to learn their age, we're going to learn the spouse's age if they're married, and the number of children that they have and what their age is. You also learn their income, which is very important for two reasons. So the first reason is you get to find out what they can afford. So in section 1, if we're finding out client info, we're going to find out age, dependents. Now I'm using dependents loosely. The children might be 24. Maybe we call them a beneficiary. The spouse might be older, the spouse might be younger. But these are dependents in the way that they are tied to this person financially in one way, shape, or form. So we're going to be looking at the dependents, the age, and the income. Okay, now why is income important? Like I said, there's two specific reasons why income is important. The first reason is it helps us identify what they can afford. If someone is on a Social Security budget of $1,600 a month, and their rent, their mortgage, whatever it might be, is $600, they have to pay for food, healthcare costs, certain things like that, do you really think they're going to be able to fund an IUL for $1,000 a month? Now that might seem like an extreme example, and it is, but it's important to know their incomes. You get a relative idea of what their budget should be. We want to write policies. We do want to be aggressive to a certain extent, but we're there to protect the client. The worst thing we can do is try to force a policy down their throat that we know they can't afford, because it's bad for them and it's bad for you. So we use that income to identify how much they can afford. The second thing we do with income, and this goes back to something we talked about in a previous Next Level Call, is we identify what the income gap is going to be. So if we've got a husband and a wife, and we're asking through the financial inventory what the husband makes, let's say it's $2,500 a month, and what the wife makes, let's say it's $1,500 a month. When the husband dies, we have an income gap. We will find that out because we're taking the time to go through the financial inventory and get the client info. Now let's back up just a second. I get this question all the time. How do I feel comfortable presenting the financial inventory to a client? Now I've been in the field, I've sat there in front of clients, and I had the same question. I'm there to service a final expense lead. I'm there to answer their questions for mortgage protection. That's the lead that they filled out. So why in the heck am I asking all this information? What I do is I explain to them, and this is absolutely true, I explain to them, I'm a field underwriter. I'm here to determine what you'd be eligible for. First thing we needed to decide is what coverage would you be eligible for? Because if I show you things that you're not eligible for, it wouldn't make sense. The second thing we need to do is we need to identify what you can afford. Because if it doesn't fit in the budget, it also doesn't make sense. And then the third thing is we want to make sure that the underwriter with the insurance company agrees with my findings and we get you approved. So what we need is we need to go through this financial inventory. It'll be very quick. It allows us to identify if you're eligible for the coverage, what coverage would be best for you, and what you can afford. So if there are no further questions, I'd like to begin. This is going to take about 10 minutes. And we present it straight up front. We tell them why we're doing this and allow them to have any questions, to ask those questions at that time. What happens the vast majority of the time is they nod their head and they say, thank you, that makes sense. And now they feel more comfortable answering these questions because your job is to assess if they can afford it. Don't take that lightly. Your job is to assess if they're going to be approved or not based on their health, based on their medications, based on their age. Your job is to help them accomplish things like covering an income gap, taking care of their beneficiaries, making sure that the house that they paid 26 years on and then passed away is not lost back to the bank. That's your job. So we take it seriously, and in order to take it seriously, we need to understand more about this person's profile, and that's what the financial inventory does. Now, the second section is the medical section. So the medical section, pretty straightforward. We're going to find out what ailments they might have had, what prescriptions they're taking. This is also important for two reasons. The obvious reason is it's going to tell us what they're going to be approved for or what they're likely to be approved for. Are we looking more of a final expense, whole life product, or are we looking at more of an HMS cash back product? We need to know that based on their medical information. But again, getting back to a slightly advanced thought on this, we're going to use this to make sure we understand what the estate planning is going to be. We're going to understand longevity here. See, if the wife is 5 years older than the husband, and the wife has had cancer, or the wife has type 1 diabetes, and the husband's perfectly healthy, what can we deduce from that? We can probably deduce that the wife is going to pass before the husband. So health and medical information is important, just as income information is when we're making recommendations on what we should be doing for their estate plan, for their longevity plan, for their bridging the income gap. Now, they're also going to tell you if they're a smoker under the medical information. And if you haven't seen this, you need to contact Americo and take a look at it. Americo has a new product. It is the ability to offer non-smoker rates for smokers. And so what they do is they say, hey, listen, you're smoking right now, but what is your desire to quit smoking? And many people who are smoking want to quit smoking. It's an addiction. They understand it's not good for them. It's not that they're just choosing to do it. It's that they've lost the ability or the motivation to stop. Well, this is a fantastic opportunity to go to them and say, listen, we can give you non-smoker rates, all right, even if you're a smoker. Now, the way it works is that sometime in the future, I believe it's 36 months, they're going to send them a swab. They take the swab, they send it back into Americo, and then they figure out if they have stopped smoking or not. What an awesome opportunity if you're filling out the medical information and you got someone who's a smoker. Now, even if they are still a smoker down the road, Americo doesn't adjust the premium, they just adjust the face amount. So it's still going to fit in their budget. So just a quick caveat on that, if you haven't looked at the new Americo product for smokers, I strongly suggest you do. It's a great product. Now, the third section that we're going to go through is the mortgage information. Again, referencing Matt Smith, Matt always made sure that he used his financial inventory even for final expense leads. If someone is filling out a final expense form, maybe it's on Facebook, maybe it's through the mail, they want to know about end of life. They want to know about burial costs. They want to know about protecting and sending tax-free money to their loved ones. They didn't ask about mortgage. But how many people who have a final expense request have a mortgage? Quite a few. So we're going to talk to them because final expense can be used for mortgage protection the same way that an HMS product can be used for mortgage protection, meaning that it will protect their loved ones from losing that asset. It might be deployed slightly differently. It might not be a cashback 30-year term product, but if we can cover that last $25,000, $35,000, $40,000 of principal that is owed on the balance of the loan through a final expense product, then the mortgage protection section becomes very, very relevant. Also, reminder, if this is a mortgage protection lead, they have the money. Normal debt to income and housing to income ratios have to be around 35% to be approved. And in today's climate, you have to prove that income. This can't be fabricated income. This can't be embellished income. This is true, proven income. So if you ever sit down with someone on a mortgage protection lead that says they can't afford it, it's absolutely not true. They just need to make it a higher priority. So Section 3 is the mortgage protection information. Now, it's important, obviously for mortgage protection reasons, but it's going to allow us to identify two things. How, if the spouse dies, do you afford this mortgage in the future? And how, if both of you die, or if we're dealing with a single person who has children, how do you make sure that an asset that you paid into for 20 years passes on to your children? So by tying this together, right? Client information gives us how many dependents they have. It gives us their incomes. It gives us their age gaps. The medical information gives us an idea of how healthy they are and who's probably going to die first. And then the mortgage information is not just we find out how much a mortgage payment is. It goes deeper than that. It goes to the idea of how much is that asset going to be worth. For most people, their largest asset that they'll ever gain, outside of maybe a large defined contribution plan like a 401k, if they work at a place for 20, 30 years, the largest asset they'll ever own is their home. You need to stress that to people. This is not something to take lightly because that mortgage is tied to that asset, and that asset is the largest thing they can protect, pass on to their spouse, or pass on to their children. Now, we're then going to ask them in Section 4 their current life insurance. Now, this is important because it allows us to find out what they think about life insurance and what their need is. Now, they filled this out. They obviously have a need. I remember a mistake that I had when I was first in the field years ago is I would tell them everything I have and then ask them what they thought. And they would say, well, let me get my other policy out and take a look and compare it. That was a mistake. I need to ask them before I present anything. What current life insurance do you have? Whole life, term life, whatever it might be. And there you're going to find out, do they have coverage? How much is the premium? If it's term life, when is it expiring? If it's whole life, do they like whole life or are they adverse to it? That way, when you go present your life insurance solution, you know what grounds you stand on. The second thing this leads to is the golden question. The golden question is, do you have anything that acts like life insurance, such as a 401k, an IRA, an annuity, or a lump sum that you're going to pass on to your spouse or to your children free of probate, right? Outside of probate when you pass. That question here, the golden question, allows us to then say if yes, sell an annuity, and if no, sell an IUL. So that's on the financial inventory right there. And then the last question is Medicare. Are you enrolled in Medicare? Now, if they're under 65, you don't have to ask this question. But if they're 64, 65, or older, ask them. It's a great way to sell an extra Medicare or MedAdvantage policy by simply saying, okay, when's the last time you shopped the rates? These change every year based on county. These carriers are constantly shuffling back and forth on which counties they want to be the lowest priced in. So if you haven't shopped this out in the last year, I suggest you let me do that for you. So you can see that we've tapped all 5 quintins using the financial inventory. You've seen how important each of these sections are and how you can ask these questions, how you can pose these questions in a way that you're benefiting the client and you're benefiting yourself. So you can help protect them, maximize this lead, right? If one lead turns into 3 sales, that's maximizing the lead. And that's what we want to do to be most efficient with our time in the field. If you have any questions or if you want a copy of the most recent financial inventory, please email annuity@familyfirstlife.com. That's annuity@familyfirstlife.com. Thank you so much.